to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Starting off with China, which announced on Saturday that it will significantly increase government debt issuance as part of efforts to support low-income households, the ailing property market, and state banks. China's finance ministry emphasized that local governments have a combined $325.5 billion to spend before the year ends, raising hopes for a boost in economic activity. However, economists are concerned that the sharp downturn in the property market, high youth unemployment, and weak household spending could still leave China facing deflationary pressures. Now, as China looks to pump more money into its economy, another global powerhouse, France, is choosing a different path, cutting spending. France's new 2025 budget comes with tough choices, 60 billion euros in cuts and tax hikes aimed at reducing the country's growing deficit. French Prime Minister Michel Barnier is under pressure from financial markets and the European Union, but he's also facing backlash from the opposition. Tax hikes will target big companies and the wealthy, but the middle class is spared. However, lawmakers could still make changes with potential no-confidence motions brewing. Still on boosting growth, in Germany, the Social Democratic Party, or SPD, has presented a new agenda to boost industrial growth and preserve jobs with promises of tax breaks and support for electric vehicle purchases. Chancellor Olaf Scholz and the SPD are betting on these measures to appeal to voters ahead of the 2025 elections, but questions remain about how the proposals will be funded. With a sluggish economy and high unemployment, the SPD is pushing for relief that might give Germany's industries the competitive edge they need. Now, while Germany's domestic strategy aims to fuel growth, the U.S. is tackling an international issue, ramping up sanctions on Iran. The U.S. has expanded sanctions against Iran's petroleum sector. Washington is targeting the so-called Ghost Fleet, a group of oil tankers that Iran uses to evade sanctions. National Security Advisor Jake Sullivan emphasized that these moves will cut off vital funds supporting Iran's missile programs and its support for terrorist groups. The latest sanctions also highlight the U.S.'s growing concern over Iran's rising oil exports, especially to China. Up next, we check the markets and dig into the latest on business in and around Asia. Stay with us. Welcome back to Follow the Money. China has issued a stern warning to the European Union against holding separate price negotiations for Chinese-made electric vehicles. According to China's Ministry of Commerce, such moves would damage mutual trust and undermine ongoing tariff talks. This comes after the EU rejected the proposal to sell Chinese EVs at a minimum price of 30,000 euros, with tariff expected to be imposed next month. China sees this as a critical threat to its EV export market, which has been booming in recent years. Meanwhile, BYD, one of China's largest EV makers, expects to establish a foothold in Germany within 6 months, despite upcoming EU tariffs on China-made EVs. BYD's Executive Vice President Stella Li criticized the EU's tariffs, saying they hurt consumers, and claimed that the company will begin car production in Hungary by the end of 2025. Li remains confident that BYD will become a key player in the European market. From automobiles to planes, Boeing is set to slash 17,000 jobs, or 10% of its workforce, as it grapples with the financial blow of a month-long strike by 33,000 workers. Production of key jets, including the 737 MAX and 777X, has ground to a halt, with the company expecting $5 billion in losses this quarter. The plane maker also announced it would delay deliveries of the 777X until 2026. The layoffs are intended to align Boeing's workforce with its new financial reality. Meanwhile, Taiwan's China Airlines has refuted claims of political pressure in its decision-making process for new aircraft orders, with Boeing and Airbus both vying to supply the airline. The company's chairman, Xie Qian, said all decisions will be based on business assessments rather than politics. This clarification comes as China Airlines considers updating its fleet of Boeing 777-300ERs, primarily used for U.S. routes. We're taking another quick break. Follow the Money. We'll be back in a moment. Business news in the Philippines is up next. Stay with us on BNC. Welcome back to Follow the Money. Despite the rapid expansion of digital banks in the Philippines, they are grappling with rising non-performing loans. The Inquirer reports ratings agency Fitch sees a surge in NPLs to 14.1% from 5.9% in 2022. That says these banks cater to the unbanked and underbanked segments. With such high-risk customer profiles, credit costs are soaring, offsetting gains from interest income. Fitch remains optimistic, though, that improved data collection could enhance risk management in the future. In a related story, the competition between digital and traditional banks is heating up. That's as digital lenders in the country offer time deposit rates nearly double those of incumbents. In a report on the Philippine Inquirer, Fitch Ratings warns that while this aggressive pricing attracts deposits, it's pressuring traditional banks' net interest margins. Meanwhile, the Bangko Sentral ng Pilipinas is set to lift the moratorium on new digital banking licenses in 2025, further intensifying the competitive landscape. Still in finance, the Insurance Commission has slightly increased the liquidity requirement of health maintenance organizations, or HMOs, to help stabilize the struggling industry. The acid test ratio, or ATR, has been bumped up to 0.9 from 0.75, allowing HMOs to continue recovering from a 5.71 billion peso loss since 2022. Now, while HMOs bounced back to a 636 million net income in the first half of this year, IC Commissioner Reynaldo Regalado tells the Inquirer that they remain in recovery mode. If HMOs fall below the new ratio, they must provide monthly updates and infuse cash to boost liquidity. The Social Security system names Commissioner Robert Joseph De Claro as its new officer in charge. De Claro has served on the Social Security Commission, the policy-making body of the SSS, since January 2023 as representative of the employers group. As commissioner, De Claro chaired the IT and Collection and Contribution Committee and was involved in key committees covering audit, risk, investment, and governance. De Claro's appointment follows the resignation of Rolando Macasaet as SSS president after accepting the nomination of a partyless group seeking a House seat in the May 2025 elections. The Department of Trade and Industry is revising the country's ambitious export targets for 2024. Under the Philippine Development Plan, the goal remains at $107 billion for this year, but the more ambitious Philippine Export Development Plan targets $143.4 billion. DTI's Bianca Saikimti notes that the geopolitical tensions continue to impact trade, though there's optimism that long-term goals are achievable. The revised export targets are expected to be finalized before the National Exporters Week in December. Now, finally, despite being the fastest-growing social media platform, TikTok is laying off hundreds of employees globally, while with Malaysia seeing the brunt of the cuts. The app's parent company is ramping up on AI investments. ByteDance is pushing towards a future using AI to automatically detect up to 80% of harmful content. This move comes amidst rising regulatory scrutiny, especially in Malaysia, where the government has ramped up efforts to curb online cybercrime and bullying. The company is also reshuffling teams globally to streamline operations. Before we wrap up, SpaceX of tech billionaire Elon Musk pulls off its boldest test flight yet of its enormous Starship rocket. For the first time, SpaceX successfully returned the rocket's towering booster back to its launch in Texas using giant metal arms. The dramatic catch came nearly 7 minutes after Starship was launched for a fifth test flight. The spacecraft, meanwhile, continued flying on its own onto space before re-entering the atmosphere and splashing down in the Indian Ocean. The test flight marks a major milestone for SpaceX, which aims to make Starship a fully reusable rocket system that could carry humans to the moon and Mars. And that wraps up today's highlight from the financial world. Thank you so much for joining us. I'm Raine Musñgi. See you again tomorrow on BNC, and follow the money as we help you follow the money.